Today's video feature is health insurance and life insurance issues during separation and then divorce. Now, this is certainly not the most exciting topic. However, it is critically important, and I'll try to keep it as interesting as I can. Now, there are two different scenarios which I will address independently. The first is a marriage where there are no children. Now, while you're separated, whoever has been providing health insurance will need to continue to do so in most cases until you are no longer able to do so, and that's when you have a final decree of divorce. At that point, it will depend on what the court order says or whatever type of mediated agreement you've reached as to who pays for premiums after the marriage is dissolved. Now, in terms of life insurance, you are certainly free, unless there is an order otherwise, you are free to change the beneficiary at any time to make sure that if you die untimely, that your benefits go to whomever you want to, now that you're no longer wanting it to go to your spouse. Now, the second scenario is the really important one, and that is where there are children involved, and especially small children. Health insurance, again, whoever has been providing it will continue to do so during the pendency of the divorce, and even after divorce, whoever's been providing for children typically will continue to do so. However, there may be a shared cost once the divorce is finalized. Now, it is also very important during separation and after divorce to make sure that the other parent has the financial means to keep your children safe and sound. And so what I always encourage folks to do is this: you want to take out your own life insurance policy on the other parent. The benefit of owning it is that you can make certain that the premiums are paid and that the coverage never lapses. What the other spouse needs to do is to make themselves available for a health insurance screening so that they can get life insurance at a competitive rate, and of course you will do the same. If your other spouse does not have the ability to pay for those premiums, then it is in your children's best interest for you to do so. So that is critically important. Now, you also want to provide for your children if you die prematurely. And one of the things that was set up when I got divorced 25 years ago was a testamentary trust. My good friend Tart Brown with Northwestern Mutual here in Charlotte helped me set it up, and I've been forever grateful for him. Basically, you buy a separate policy of life insurance to fund a testamentary trust. It provides for the children's expenses while they're minors. It provides for things like college, and then later on in life you can start distributing certain portions of the trust. And I did it at 25, 30, and 35 years of age because, again, maybe at 25 they'll be irresponsible. Hopefully by 30 they've grown up a little bit, but surely by the age of 35 they've learned enough hard lessons that they'll understand the value of money. So these are very important issues for not only the other parent but for your children, and so I encourage you to seek out an expert like my friend Tart Brown because it is so absolutely important, and surprisingly it comes up more often than you may think. So if you have additional questions, I know this is a complicated area. My name is Robert Reeves. My mobile number 704-351-7979, or email me robert@rjrlaw.com. Hope it helps.